Good afternoon, everyone, and thank you very much for joining us today. You've got Brian Anastasia from the Retail Doctor Group, myself and Michaela from Jardin here today. Look, the purpose of the call is to give a bit of an overview broadly around how we're seeing the consumer and the spending backdrop as we're sitting here today, and then looking through at some of the predictions and key themes as we look into 2025. Just in terms of format, Michaela will give a brief sort of 5-minute introduction on the macro backdrop views as we look into next year. Then Brian and myself and Anastasia will talk to some of the anecdotes and what we're hearing and seeing through cyber thus far and how that's sort of setting us up into Christmas. And then Anastasia is going to give a bit of a look into the crystal ball in terms of some of the key themes and outlooks for next year. And then we'll wrap up with just a brief discussion and some Q&A. So over to you, Michaela, to kick off on the macro side.
Thanks, Ben, and thanks everyone for joining us today. Very exciting times. We had a very complex year from the macro perspective in 2024. Things weakened quite significantly, particularly for the consumer sector. Last week we got GDP data, as you can see on my first chart on the left-hand side. There was really very little activity. The last bar shows that it was mostly the government supporting growth during the quarter and really throughout the whole 2024. On the right-hand side, I just wanted to show how big the size of the public sector is getting in terms of supporting growth. That's been the key highlight of how strong fiscal policy has been throughout the year. The consumer, as you can see on that bar chart, is really not showing anymore. A year ago or so was really, really strong, and now we're not seeing that flowing through 2024. The major challenges, we had high inflation, we had high cost of living, we had constraints, we had high rates as well, but that might start to change. As you can see just in a little bit more detail on the consumer, consumption's been really on essential items. These two charts show it's been very flat, and if you look into detail, the main factors that have kept the consumer going are rents, insurances, health expenses. All these essential sectors have kept consumer in the positive side, but really Q3 data show a flat number. And there were some technicalities in the data that made it look a little bit worse, but overall we can see how the consumer has been quite constrained. If you look a little bit more forward, there are a few reasons why we think the consumer is going to be very good or a lot better than 2024 into 2025. The first one is the structural factors. We see the savings and the balance sheet in the household sector are still really healthy, even though they're quite leveraged. They have a lot of debt. As you can see on the right-hand side chart, that's the excess savings. We have two lines here because the ABS did major revisions on the household savings data last quarter, and they revised up the whole savings ratio for the last 12 months. That means there is about $43 billion extra sitting in household accounts, and shows that there is some cushion, some support if things were to get a little bit worse. On the left-hand side, as you can see, there's one line that brings everyone's attention or takes your eyes to, which is that light blue line. That is sentiment across different segments of the consumer. As you can see, owners, those people who don't have a mortgage, they're doing much better, they're positive. Normally, these people are the ones who hold a significant amount of savings, whether that's super funds or just the wealth in their house. They are still doing fine, they're still spending, and those with mortgages and renters, they've been going through the worst throughout the last year. But we're very positive mostly, firstly, because the labour market's been extremely solid. This still happening, and it is slowing in terms of the pace of growth on employment, but really it's still really strong. So top left, you can see the dark blue bars are full-time employment. In the last year, it's been significantly stronger than part-time, particularly in the last 6 months. That means spare capacity is actually being reduced, not increasing. We shall see tomorrow what the new data says and if this is changing, and that will be a major concern for the central bank that's trying to keep employment growth strong. And this was a major issue before the pandemic. Remember, employment growth was soft, and they couldn't really get unemployment to to fall below 5. Now we're at 4.1 after a very strong hiking cycle. So it's quite strong and remarkable, really. So the second thing is the decline in inflation. The reason why we are positive on the consumer is purchasing power is improving as prices are starting to slow. Of course, there's a little bit more to go. The essential prices, as you can see in those colorful bars on the right, on the bottom right, those are living costs. Essential living costs have come off, but it's still really a lot higher than it used to be. But in saying that, all of this is improving. We have a lot of support from government in the form of tax cuts, supporting those households who have issues as well. And we think there's scope for things to get better. So firstly, as I said to start, elevated levels of debt are an issue. They always have been. The consumers quite sensitive to changes in rates and to changes in the economy, considering the amount of debt, but also that the amount of savings in the system is quite strong and provides some support to that structural high debt. The second thing is real households' disposable income growth remains supported by this very strong labor market, and easing inflation pressures, easing cost of living also would support. So we think disposable income growth will be positive into next year. And as you can see in the very colorful chart on the left, the tax payable is actually declining, meaning the tax cuts are actually supporting the consumer and disposable income growth as well. On the right-hand side, I wanted to highlight our measure of financial conditions. This shows we find that different sectors are going through different things in this economic cycle, where interest rate hikes have not really been felt equally across different sectors. But what we see overall is financial conditions are also easing, despite the RBA not starting to ease as quickly as people would like. And this is mostly a function of the banks starting to ease rates on their own without the RBA. So those consumers who have savings and are fine, they're spending. Those consumers who don't have savings are starting to see support from the banks. So that's another way of easing that we're seeing, and another reason to think, bad conditions for the consumer have peaked already. And just lastly, on policy and what to expect for next year. Yesterday, the RBA did a little bit of a shift in terms of their policy guidance. They adopted a very mild easing bias, suggesting that the data has been surprising to the downside, and maybe the level of rates is no longer consistent with the economy set. And if things deteriorate from here, cuts might be a little bit earlier than expected. We have the view that cuts will come in May. We're still not convinced February is the month where we'll see some easing, but this is mostly on the back of the strength in the labor market. We think there's still momentum in there, and there's not really need for immediate easing as such, but we have a strong or a very important release for CPI data late in January. So if we see a very soft trim-mean inflation print, then the February meeting might be the opportunity to get those rates to start to come down. That said, we don't expect rates to become accommodated. We just see the rates slowly coming down to a level around neutral. So only 3 cuts for next year, but that will be enough to see confidence picking up, consumers feeling better about the economy, and of course supporting the housing sector as well. And just lastly, on the fiscal side of things, we had tax cuts, rebates. We had a lot of fiscal spending in terms of infrastructure, health, everything is being supported by the government, and we think this is not going to change into next year. So the outlook is very bright, I'll say. I can stop there. If there is any questions, happy to take them now or after Ben.
Fantastic. Well, let's keep moving. We'll jump onto the cyber recap.
Right,
Thanks, Michaela. Maybe we'll skip to the next slide here. I think if we just have a look, and we're going to sort of talk very real time of what we've seen over the last month. I think I've had a chat to, and I'm let Brian jump in a second as well, a lot of retailers, data providers, landlords, etc. over the last few weeks. And I think what's very clear is that the cyber events of the past couple of weeks have, in most cases, exceeded people's expectations. And I think the consensus we're starting to hear out there now at the moment is that people are feeling that Christmas is increasingly de-risked, that inventories are tighter and probably in many cases tighter than people might have expected, given that they've sold down a decent amount of stock. And I think generally speaking as well, they've found that the market has been pretty rational over this period and very targeted. And I think the whole new age of data, and we talk a lot about sort of data is now the most valuable currency. So I think people have got much smarter in terms of the brands and the groups we've spoken to, that we've seen bigger baskets, typically through cyber, and we've also seen weaker transactions. But what people have been able to do is add additional items into basket. They've been able to lure someone with, they say, 50% off, but then get another 20 off in, or get another full price item. So we're also generally finding there's been some more optimism around gross margins. And some of the larger aggregators of people we've spoken to out there of POS data, et cetera, are seeing gross margins up 20, 30, 40 basis points in aggregate. So I think, generally speaking, at a high level, a good outcome. By channel, what I would say in terms of what we've seen and heard is that online has outperformed, but that's not to say that store traffic or stores have been weaker either. If we look there on the bottom right chart, it's just from SimilarWeb, but you can see there's been about an average sort of 25% increase in traffic in the week leading into and the 5 days post Black Friday this year. So very strong engagement online. Now, there was definitely an element of this in terms of people researching for product, but at the same time, what we've found is that online penetration has lifted. Happy to share a report if anyone would like post this in terms of what's a whole bunch of sort of 54 brands that we've tracked around this. But in terms of the categories and what we've found has been stronger, we've seen sort of electronics has been very strong. Some of the fashion side of things has been particularly strong. We've also seen some of the housing related categories as well as footwear and outdoor has been stronger. Where we've seen weaker performance from a broader category perspective, the local marketplaces had some particularly weak traffic. And similarly, I think within hardware, it was patchy in terms of sort of the winners and losers. In terms of putting some broader numbers around it, generally what we've heard is that the aggregate for the cyber week has been up anywhere from sort of 5 to sort of 14, 15%. When I look at some of the bigger players or aggregators. And I'd probably say that the average is probably sitting in between that, around sort of somewhere between 7 to 9% is the aggregate in terms of what we've heard from a spending side. I might just flick to the next slide, Michaela. There's just some of the segments, and I pinched these charts from Westpac, all public, but came out a few days ago, I think, just to give some context around some categories, just having a look at what they're seeing with their spending. And to be honest, it's pretty consistent with some of the other data we've seen from the likes of NAB, from Spotify, and also some logistical freight data we've seen from Ship It, albeit Ship It is probably a little bit different in terms of the alignment, in terms of how that comes. But electronics sort of up 9%. Clothing and department stores, which I think has been very much led by clothing as opposed to department stores. And you'll see Maya was yesterday saying that cyber was solid, but I think was a bit underwhelming. And similarly, other retail has been very strong as well. And from a state-based, I think it's interesting we're seeing Victoria is actually starting to show a bit more signs of life and wasn't sort of the worst performer. New South Wales is weakest on a year-on-year basis. So I think generally speaking is what I would say is that people have been pleasantly surprised. I think what's been evident to Michaela's points is that there's an enormous amount of savings sitting on the sidelines. Now, I know a lot of us, and I can sort of empathise coming off a fixed rate mortgage to a variable, sitting there with 3 kids and a nice mortgage, it's been tougher. But with these events, I think people are more comfortable going out and spending when they feel they're getting a deal. And I think this is creating some optimism as we look forward into Christmas and Boxing Day, is that if you put the right deal in front of people, they're willing to engage and purchase the product. I was speaking to one of the big global data or social groups, I think a lot of people will probably advertise through, and what they're seeing is that people are really trying to connect and extend up this cyber into Christmas, being targeted, but also being smart to really keep engaging and putting the right offers in front of the consumers at the right time, because it is stimulating and resulting in a transaction. But I might pause there and hand over to Brian. That's sort of my little 2 cents worth, and then we can talk a bit about the outlook as well before we roll forward.
It's very true. I mean, your commentary's great, Ben. A couple of sort of comments. There's this interesting piece around the structural change in the way consumers are now moving into Christmas and the way retailers are adapting. If we look at that Black Friday, the cyber, Black Friday, Cyber Monday, 12.7 billion. And really starting retailers coming off a mid-October start in many cases to really start promoting this period. It's for the first time surpassing Boxing Day in the entire window that starts literally mid-October or 23rd of October through to end of January. We'll see about 70 billion spent out of about 420 with a skew to online. But the other comment I'd make is that we're seeing, in my mind, two speeds to this. We're seeing the larger retailers, such as you've commented on, Ben, particularly the publicly listed, really planning this out meticulously, contributing and getting good margin in the work with their suppliers and so forth. I think we're still seeing a bit of a lag for other smaller retailers to start to really come to grips with this. They don't have the buying or the scale power. So when we look at the numbers, we see a skew towards the bigger machinery, if you like, the bigger retailers. And I think that's an opportunity for all retailers to start to think about this next year. It's absolutely part of the calendar. And when we see Christmas hams starting off in Coles or Woolworths in the first week of October, we'll know that's the trigger sign for this period. But overall, great to see a bit of stimulus in the economy, and retailers needed it. And as you say, it springboards us into a more positive outlook into 2025 overall.
Yeah, no, I think as well, if we look here, and this is a chart I've pinched from Michaela, just looking at some of the outlook, and this is sort of putting in some of the latest data from GDP, is that we've obviously, it's been a pretty tough year for the last 12 months, albeit I think the strength of population has really carried us through from a consumer standpoint. Admittedly, a lot of it through base effect, but as you look into next year, you're going to see 10, 20% increases in disposable cash flow or discretionary cash flow from a year-on-year basis. So as we start to see cycle through some of the benefits we've had from population growth, we feel that we're going to be able to make a lot of that up through just the fact that people will see an improving outlook on this side of things from disposable income. And I think to Michaela's point is that while we think rates are going to be later, you get front page of the Daily Telegraph or Daily Mail talking about potential cuts in February, it just starts putting a bit more confidence back into people's heads and willingness to say, okay, I'm sitting on $1,000 of savings or 2,000, whatever the number is, I'm willing to spend a bit more of that on the Christmas presents or for this year, if the right deal becomes and gets put in front. So I think that's really sort of what we're looking for now as we move into Christmas and post is how retailers can get out there and entice and bring people across. The ones to Brian's point, I think we're seeing doing the better job are those sort of really continuing to embrace data. And it's interesting, like this is all stuff we've published and based on data, and again, happy to share this report, but ones we saw strongest traffic through cyber was things like Temple & Webster was up 25%, Bunnings was up 31%, Harvey Norman was up 31%. Now their site was also down last year, so take that into consideration. Hype was strong, Big W, BCF, these sorts of names, all companies that I think are investing a lot around both fulfillment from a logistics standpoint, but also data and understanding the customer and engaging. And I think that's pretty telling. And where we've sort of talked to potentially some upside risk as we look through into Christmas into next year is the likes of Harvey Norman, JB Hi-Fi, Super Retail, these sorts of names that I think are probably looking more optimistic from an earnings standpoint. So that's our little wrap on cyber. And now I'm going to pass over to Anastasia just to run through some of the themes and outlooks as we move forward. So Michaela might get you to stop sharing your screen and Anastasia can put hers up.
And while Anastasia's doing that, I might just make the comment that fantastic commentary from the team. We're really thinking about what are boards and CEOs really needing to focus in on. You know, what are both consumers and retailers saying to us? What are the trends? We haven't touched so far on the growth of Temu and Shein, and we will in this document, and Amazon. You know, they're nearly $10 billion themselves in the last 12 months, compound growth of 25%. So we're seeing, it's quite interesting, we're seeing retail play out in these various levels. The overt physical level, we've talked about, the online, and then this really interesting piece about the ecosystems that are Amazon and the machinery that's driving a very strong logistics-driven, data-driven retail offer. Over to you, Anastasia.
Okay, well, we're going to touch on some of the trends that we're seeing. So each year we release our predicted trends through retail and consumer. And this is based on a lot of the consumer research that we do, retailer research as well, and to really gather what's been happening this year, what do we think is going to happen moving forwards. So we'll quickly just touch on them all, and then we'll dive into each one in a little bit more detail. First of all, that human element in retail. This has obviously become quite strong in the last few years, and we see this keep pushing when we talk to consumers, even those that are digital natives, you know, your Gen Z, they are still favoring that physical store. They still want to have engagements with people. They still want to talk to people. But it's just changed a little bit with how they want that. No surprise here, this year's always been about discounts and price and very price sensitive consumer. But as we move in, as Michaela was saying, there is a bit more confidence now. We saw that turn in the last few months, and we've seen it's about value. So it's about understanding how you offer value to your customers. And one thing that we've seen come back, particularly in the last 3 months, is this rise of shoptimism. So shoptimism was something that we saw back in 2020, and it's, you know, purchasing these lower value goods, but to give yourself that dopamine hit, that feel good factor. And you can see that through those Black Friday numbers. So we are really seeing consumers, it's the treat myself culture. So you see it a lot now. I'm just going to treat myself. It's been a hard year. And we're really seeing smart retailers play into that. If you've heard myself and Brian talk before, you'll know that we have seen big changes in loyalty, with customers being more loyal now than ever before. And we released a white paper early in the year where we dug into this. And even in the last 2 or 3 months, we've seen this continue to heighten, and the importance of loyalty through the eyes of retailers. Impatient customer, this has been a trend for quite a few years now, and again, it's something that we do not see going away. Consumers are a lot more time sensitive. We talked about the currency of time a few years ago. What we're seeing now is consumers are much more impatient because they want to spend their time in different ways. So what this means for retail and for the sector is it's got to be efficient, it's got to be quick, it's got to be frictionless. So we talk a little bit about, well, what does that mean when consumers engage with you? Subconscious commerce. So this is a new one that we've seen really take off in 2024 and is only going to accelerate during 2025. So this is understanding and predicting what consumers are going to purchase before they've even thought about it themselves. So we've seen the rise of AI and predictive technology. Well, this has become commonplace now. So retailers are actually able to predict exactly what consumers are going to spend in advance, before customers have even thought about what they need. So we're going to see that move through retail. The circular economy, so no surprises there. That has seen tremendous growth, really pushed by that Gen Z consumer. They really have got more consideration for ethical, sustainable aspects. It's something we've known for a long time. It did drop down through 2020, 2021, even 2022. But in the last 12 months, again, it's something that we've seen, but it's more in circularity. So we've seen these larger retailers moving into this space now. So it's no longer just op shops and secondhand. Localization and community engagement. So this is a trend that we've seen really pop up in that consumers expect even the bigger retailers to adapt to their local needs. So not just shop local, not just shop Australian. That was the trend we saw back during COVID. What we're seeing now is customers expecting retailers to be part of the community. They want to value their community lifestyles, and therefore, how can retailers adapt to all of these micro environments that consumers are in? The rise of decentralized search. So we've seen definitely a change with how consumers are actually researching. So we know that around 95% of all retail purchases are researched in advance, but how consumers are researching really has changed in recent years, and we're seeing this accelerate and predicting moving forwards. we couldn't talk about trends without talking about AI. So obviously that is something that will continue. Now, the question everyone's lips in 2024 was, well, what do we do with it? Moving forward, it's how do we actually make it more efficient? How do we actually utilize it to the best of our abilities rather than using it just because we feel like we should be using it? Data protection. So with the changes in some of the legislation that's coming out, with the change of consumer mindset and some of the issues that retailers have had in the last 12 months, we have seen a shift in consumer mindset where they really do value that data protection. They also value their ease of lifestyle, so trend for that impatient customer. So we have these two trends kind of pulling at each other. They want the privacy, but they also want the simplicity. So retailers having to find this nice balance of what consumer data do we collect to make it easy for them versus how do we keep that data private and ensure that our customers feel safe. Retail media, this was a trend that first came about this time 12 months ago. We talked about it being really one of the big things for 2024. We've really seen that come to life. We've seen a lot of retailers making a lot of money, particularly in America, with Walmart launching their own range of retail media. Some great examples in Australia of how bigger retailers are making some money out of this. So we will see more and more retailers really monetize that. And then the invisible enemy in retail, this is what Brian's been talking about. This is the rise of Temu, the rise of Shein, the rise of Amazon. We go back 2018, we first talked about Amazon coming and we said it is going to be a threat. 6 years down the line, it's exactly where we would expect it to be, with around 1 in 3 Australians now, members of Amazon Prime. So we can really see it starting to become a norm within the industry.
One of the sort of overarching themes for me, and when we're working with our clients, is to really define from the start how the customer journey, the path to purchase, how they're adapting to retailers' brands, and are they there for a shopping experience or a buying experience? And much of what we're looking at is the drive of the buying experience. That's the data analytics, if you like, AI and everything that Anastasia's talked about. And the shopping experience, which funnily enough is the human experience, has the greatest variability of all. So one, we've got this lovely predictive data-driven analytics, and the other side of a consumer's choice set with a retailer of choice is to go to that retailer or another retailer for the experience. Are Australian retailers really keeping pace with building experiential retail? Probably not by global standards, but there are some nice call-outs. But we're very much advancing into data and analytics.
And I think that's one thing that we talk a lot about is, consumers are driven by emotions. They're very much human first. You'll have heard us say before, 95% of all consumer purchase decisions are based on emotions. And this is where this human element comes into it. So we're seeing consumers really lean towards that human element. We talk quite a bit about the staff aspects, but as Brian touches on, it's this whole in-store experience. And that is how retailers need to start differentiating. We did some research earlier this year, and on this particular trend, they're looking to have those great relationships with staff, but it's a lot more nuanced than it was 2 or 3 years ago. It's no longer, greeting the customer and asking them the obvious questions. It's having staff that can really create something that online can't, that have the knowledge that can't be researched, and that also in return can identify customers, their emotions, their different personalities, because not everybody wants to be sold to, not everybody wants to have that engagement. So it's a lot more nuanced now than it ever has been, and that importance of staff training, staff engagement, having really great staff on that retail floor can make all the difference between having a brand that will stand out from the Temus, the Sheins, the online players, versus creating something that can be replicated easily.
Over the years, sorry, Ben, go ahead.
I was going to say, I think it's just interesting on that point. You look at 3 big global retailers, JD Sports, Dick's, and then you've had another sporting goods and retail in the UK. The ones that's invested aggressively in format and differentiation is Dick's. They're the only ones that have actually upgraded earnings and outlook more recently, and probably getting some better sell-through of some of these bigger brands out there, which I think probably transfers to some groups like Super Retail, etc. down here are investing in formats and doing pretty well as well.
It's an important part of the element, and that's the social instinct that Anastasia talks about. Over the years, when we've been working with clients to build out retail channels, the early days was always about, a store in every corner. It was all about scale at that level. Scale still matters at one end of the spectrum. But depth of experience of customer matters equally, if not more so than ever. And now I think that the adage is around building tiered levels of retail, physical retail, building experiential showrooms all the way through to back of store type fulfillment, and then supporting that with the machinery that we talk about when we talk about data and analytics. So there's a big capital spend coming downstream for a lot of retailers. A lot of retailers have already spent that capital. And I think when we look at the numbers, Ben, we see the businesses such as you've touched on that have really got that core business information system engine at play. They're really driving out these numbers. But it's a marriage of both.
I think one of the things that really is quite key about this human element, and I think it was interesting, Ben, you talking about Dix in particular, it really is understanding the nuances of what do your customers want at different parts of the journey. So as Brian said, it's not always big retail. It could be small, experiential. It could be really frictionless online. I read recently, Dix going back to video selling, and they had a really successful campaign doing video selling because it puts that human element. So it was almost going back to the days of live TV shopping. And I thought that was a really interesting way of bringing that humanization, and it's putting the brand, putting the products on all of the different channels that the consumers are, rather than singly having a shop on every corner. And it is quite nuanced as who is that customer, where are they, how do we engage?
And I fully expect in the next 2 to 3 years, we will see more and more consolidation in shuttering of physical store sizes in quantity of numbers. And the focus will be far more on that tiered quality. And we saw it today, didn't we, with a little bit of Mosaic's activity, which is unfortunate. The other topic I sort of would raise linked to this is this generational change, both in consumer, but in owners and leaders of retail. So retail environments are changing and retail structures are changing, all linked very much to this adapting, changing consumer and age as well.
We'll just quickly touch on this one a bit further. This one I think is pretty self-evident, as we've seen the numbers that we've just talked about through Black Friday. Consumers really are looking for those discounts, switching out. But one thing that we have seen in recent research is it's not always the cheapest. So earlier in the year, it was leaning towards brands and retailers that they trust. And we've seen the value equation become more and more important. So, for example, increased efficiency. We talk about this impatient customer, better delivery aspects, better in-store experience. We're really seeing them willing to trade purely the lowest price to have these built-on experiences. So from a retailer perspective, it really is understanding who that customer is and what does value mean to them. Because again, this is really different for each customer. It's not as simple as saying it's the cheapest price, because that's not obvious. And then we touched on optimism. I think the retailers that are doing it really great is the ones that are seeing this as this retail therapy. They're able to tick the value box while also ticking the treat yourself box. And I think that's really, at least in the short term, in the next few months, is definitely going to be one of the big opportunities there for those smart retailers that can lean into that. Advanced loyalty, for anyone that hasn't heard me say this before, loyalty has a really strong influence. And we talk about whether customers are loyal to retailers. Well, 83% of customers say they are loyal. And we actually see that this is more so with Gen Z. And that is because if they connect with the brand. So if we've got this emotional connection to the brand, we are seeing them being more loyal. and then they're less likely to play on price, and it becomes about all the other factors that a brand can offer. We then know the influence of loyalty programs. So we asked retailers during 2024, what is your priorities for 2025? Loyalty was number one and has been for over 12 months now. It is what retailers are investing in. And in return, we can see the figures why. 2 in 3 consumers saying that loyalty programs do influence their behavior. And the key one there, 27% actually say that it will spend more money with retailers because of the loyalty program. So we're seeing a lot more investment into technology and loyalty. But one of the really important things when we look at our consumer research, so we do neuroscientific profiling of consumers and we look at those emotions. Loyalty means different things to different people. Collecting points for cashback is just a hygiene factor. So retailers that put that in as a baseline quite often giving away money when they don't need to, because that often doesn't mean a lot to a lot of consumers. So I think the nuances here are really understanding, well, what does drive my customer to be loyal? Is it special events? Is it VIP? Is it exclusive products? There's a whole range of things that we really need to delve that one layer deeper into. And we're seeing the smarter retailers really shift these loyalty programs that are no longer purely points for transactions.
As we move into this phase of marketplaces, complexity of channels, wholesalers becoming retailers and so forth, it's incumbent upon retailers to really start to build out that community, that tribe that Anastasia talks about, and go deeper and deeper into understanding the psyche, motivations, and building out this story from that point. And that's where our most successful customers do their work. Their starting point is to really understand that.
This one I'll skim over really quickly because we've seen this on the radar for quite a few years now. Customers are impatient, and I think this is where we would say to a retailer, you need to look at every single touch point with your customer. Is there a friction point? We talk about different personalities having different levels of impatience, but as we move through the age demographics, those younger consumers, millennials now the largest spending demographic, we're seeing Gen Z move into the workforce, they are even more impatient. So if you do have points of friction at any point in that customer journey, whether it's through social, website, in-store, we're losing those customers. So there's a lot of low-hanging fruit that we see quite often. Really simple things. Is there extra clicks in that website? Are you making them enter that information several times over? Is there an extra step that they have to take when they go in the store to find what they're looking for? All of these things are small enough to really turn these customers off. So linking back to that loyalty, if we do have these friction points and customers think they are wasting their time, we really do lose them on that journey. So it's really important for retailers to really conduct almost a diagnostic of that whole journey. So we talked about subconscious commerce. This one's really interesting. We've seen the rise of AI and big data, basically allowing retailers to now predict. So we're going to be seeing that really influence supply chain, really influence what products are actually coming on the shelves, to the point where we'll be able to see this on a really local level. So we're predicting that the ability to use AI and use these big data analytics will influence right down to a store level and a consumer level and change that decision-making process and really just speed up the whole supply to consumer aspect.
So we're not too far away from personal avatars, and shop assistants will have personal avatars as well, like all of us. And so the knowledge that's required to operate at that level and other levels will all start to think of training. The training platforms will evolve. So many aspects will evolve. But if you start to think about AI as the portable brain and the way that it will influence our community profoundly at every level, like every other community, we are just at the start of the curve.
And I don't think you can underestimate the backlog of tech that's to come.
Exactly.
Speaking to a few of these big global tech companies of late and at a few events and working with some of them, is that, and this is probably my ignorance in this space, is that the chips have really been the biggest incumbent. There's been 3 to 4 years of some pretty material development around capabilities around bringing up virtual shop fronts, tailoring shop fronts based on what you can see in terms of products you put up, transacting in through different platforms, different channels. There's a whole bunch of stuff I think that's going to come through very quickly. And it's not a function of developing, it's a function of people having the capability in terms of the hardware they're using. And obviously, given availability of chips, and Apple's obviously launching their AI stuff now, there's going to be some pretty significant, I think, advancements around this over the next little while, which is going to mean scale is important in retail. Ability to adapt and move quickly is going to be even more important as well.
And I think what it does do as well, Ben, it shifts the traditional knowledge base in retail from the retailer to the consumer. And the consumer will increasingly hold the knowledge, and AI will just be an accelerant to that. It'll be very interesting to think through that.
Moving on to trend 6, circular economy. We said this a few years ago, we're expecting it really to see it grow exponentially. Several factors, obviously the price aspect in the last 12 months, but we're seeing a lot more values driven. And so we're seeing these bigger retailers, Zara, H&M, The Iconic, they're all coming in and offering their own resale platforms. We've seen Vinted and Depop really pop up, ThredUp's going really well globally. So we're seeing a lot more players in this space now, and therefore the bigger retailers are getting involved. But from a consumer lens, it comes back to this whole value aspect, but it also comes back a little bit to that experiential. So there's a bit of experience around it. It's the surprise, it's the excitement of the find, coupled with that value aspect. I need to get more for my money. So there's a few trends that are really influencing this, and we would expect to see more and more of the bigger retailers. We've seen some examples of even the high-end Gucci having their own pre-loved pop-up shops. So I think we're going to see more and more of this come, and consumers really leaning into it through that human aspect, the experiential aspect of it. We've talked about localization. We have seen this grow. I think the clever retailers, particularly in the big networks, are able to take their large brand, their trusted brand, their great offers and the great tech that they've got, but then take it really down to a local engagement. And so where the local retailers really need to step up in terms of the experience that they're getting in store, and it's those bigger retailers that are now managing to make it really nuanced to who is that local customer and creating those local communities. The decentralized search, this was something that we talked about. This was the use of voice technology, AI. Everyone's used to talking to Alexa or talking to Siri. We actually started talking about this probably 2 or 3 years ago, and we're expecting to see the real insurgence, especially with a lot of the new AI that's being used, of this ability to search across all different functions. Search using images, consumers really looking for the products and doing that research, no longer just typing it into Google. So we're seeing that move to voice search, image search, using social media platforms. So it's really not as straightforward anymore as they're going to your website and they're searching your website. So we really are seeing that broader search. So from a retailer, it actually means understanding again in really nuances who your customer is. This is my area, so I'll obviously keep saying that, but different consumers want different things, and really understanding what does this mean from a search perspective. And again, coming back to how do we remove those friction points? How do we just make it easy for them to do business with us?
And sort of linked to that is that the end of the keyboard is nigh. Point of sale systems will become redundant for retailers. Retina searches, visual searches, everything Anastasia's touched on is the norm in parts of the cities of China, for example, and will increasingly be on our shores. So we start to really think about this agile mobile customer whose retina, for example, is their passport.
I don't think we need to touch on AI too much at this point. I think we're all, we've heard it talked about quite a lot over the last 12 months. I think one of the things that we recently conducted a retailer sentiment report, and it was definitely noticed that Australia was definitely a step behind the world in terms of AI adaptation and confidence to actually execute AI. And I think one of the things that we keep saying is there is a lot of learnings to be had. There's a lot of retailers that really are embracing this. And I think from those retailers that don't really know where to start, there's a lot of great examples out there. And I think it's not going to go away. And there's definitely been a lot of retailers that, from the research that we did, were very shy to even jump in. So I think we're just going to see this accelerate. So it's really looking at, well, who's doing it great and what can we learn from them? We've even started to see, there was an example in China of a shop that changes their in-store visuals using AI to generate new images within the store environment as different customers move through, depending on what's being purchased. So really, some retailers are really adapting with it and using it through everything from not just creating efficiencies, but creating these great customer engagements.
I think the other quick comment I'd make is that working with retailers, it's really understanding what large language model do you want to use for what purpose and what outcome. Supply channel, CRM, data analytics, whatever it may be. It's the idea that AI is a very segmented application, and it's important to link it back to strategy and to drive the business case around it, rather than this sort of amorphous thing called AI.
Data protection, I think this one speaks for itself. Consumers are getting more and more conscious. I think in the last 12 months, we have seen a lot more data breaches than we have previously through a lot of the big Australian retailers. So I think really, thinking about what do we need to do, how do we keep that data safe? We've seen the rise of data safe rooms to really help retailers, especially with the rise of AI, be able to trial things in a data safe environment. So I think trust has been the word of the year. Consumers are leaning towards retailers that they trust. They're willing to spend more with retailers that they trust. And I think this is really one of the ways that they're looking for that trust. Retail media, we've seen that growth massively. Expected it to generate an additional 1 billion in revenue. I was reading a great article earlier from Big W with the rise of one of their beauty brands that brought in, I think it was 226 or something like that % increase in sales from the usage of retail media. So we really are seeing some great use cases of this now, and now it's grown beyond its infancy. And I would expect to see a lot more retailers be jumping on this as to understand, well, how can they use retail media to gain an additional income stream to them. And finally, the last trend, Brian.
I wanted to say, Ben, when we were chatting earlier, you mentioned about the number of parcels coming through.
Yeah,
on that?
I think there's some big numbers now in terms of what these guys are generating. Like you're seeing pretty material numbers coming through from these guys. Is that, I think we're hearing sort of Temu now is probably annualizing upwards of 1.4 billion in Australia, and then Amazon, I think, is going to be doing sort of well over 7 billion as we move into next year. And it sounds like their aspirations now talking sort of 10 and 10 plus bill. So yeah, some pretty big numbers, I think, in terms of what we're hearing, and it's they're having a pretty significant impact. And I think it's not to be underestimated in terms of the shift and push towards same day and the capabilities that they're getting, just in terms of what that's meaning for frequency of purchase and broadening their addressable market. And obviously we've seen that they've just launched their new bulky centre here as well. So pretty significant opportunities for these guys, I think.
Yeah, well, that's right. I mean, it's something like 1.2 million parcels arrive a day into Australia, and a fair swag of that comes out of these types of businesses. There's an interesting little anecdotal comment that if you looked at the Amazon piece, you'd say that on average, an Australian family has 3 to 4 Amazon parcels a week delivered to their home. Well, that's getting up to the US type numbers. And in fact, in the UK, we started by talking about Black Friday, Cyber Monday. The number one growth channel was TikTok Shop. So you're starting to see this idea of the data that Anastasia talks about. And we've called it the invisible enemy because, of course, we all grew up with high visibility to an online and physical retailer. But at another level, this is going on at increased rates. Now, there's also global discussions about equity and fairness in terms of tax and excise. But nevertheless, these businesses are doing some extraordinary numbers. And it also, and Anastasia touched on this, if I think about Temu, and to a degree, Shine, it starts to redefine the concept of quality for many Australians who know they're not going to get that great quality, but it's very cheap, or relatively speaking. And in Temu's case, we start to see this business open up category warehouses in Australia, around the world. Amazon trying to compete, doing a direct-to-consumer model, the same way Temu is. So this will all accelerate. And it's a big challenge for many retailers, big challenge for the discount department store sector in our country, and probably the department store. And I think there's a real eye out for where this is going.
Yeah, and I think as well, the challenge is going to be is that scale is going to need to become increasingly important. And we were sort of talking about what this means for next year, and obviously we've gone through those predictions. I think the ability to leverage scale, if you've got it, is going to become increasingly important in this market. One thing that continues to surprise me is the lack of innovation and investment that's coming from supply chain from the domestics. Now, I think groups like AusPost have been moving very fast in the context of probably what people thought they could do 3, 5, 10 years ago in terms of same day with Metro, etc., and the take up there. But I think we need to see a lot more investment in logistics and really trying to break that down, because you look at someone like Amazon who's matching their algorithm on price 7, 8 million times a day. You're not necessarily going to beat or play on the price game. You need to think about how you differentiate. So the points you talk to in terms of, is it your store through differentiate offers with store service, experience? Is it through range, having exclusives? Is it going to be through really breaking down some of that last mile? And I think it's telling that you look at some of the engagement and traffic from Amazon and performance in, say, metro areas at the moment. That's where we're hearing they're really outperforming, and I think it's a function of moving to same day. That's why they're getting better take up in grocery. Hearing Amazon, Coles and Woolies are talking about it. So I think that needs to be a big focus. And then similarly, you can't compete against something like Temu or Shein on price. And we hear anecdotally, and you sort of hear from sort of some of the discount department stores, it's getting harder on that pricing point, and consumers are expecting more for less. So it's going to be a big year of innovation, and I also think it's going to be a year of consolidation, because scale players are going to need to leverage that, and it comes down to capex, and talk about things like cost of capital. With rates coming down, it's probably easier to get over some of these investment hurdles. I think that's going to be important. And if you're a mid to smaller type player, I think you work out who you partner with. You sell as a reseller on Amazon, etc. So I think there's lots of opportunities. People need to really think about it.
I think it's an exciting period coming up for boardrooms and CEOs now, and really thinking, and your point about capex is a good one. I think we have, in fact, I know statistically speaking, we're lagging per capex spend per retail head, if you like, or unit. We're certainly lagging to the US and the UK. However, this is a great opportunity, and as Michaela introduced, there's optimism in consumers. It's now about getting very, very sharp in that differentiated model. Anastasia.
I was just going to say, off the back of Amazon and Temu and Shein, one of the things that they are doing is they're conditioning their customers in regards to their expectations. We've seen hygiene factors. In other words, what are customers' minimal expectations, even if we take price out of the equation. As you were saying, Ben, this same day delivery and express delivery and free returns and all of these other aspects that Amazon, Temu and Shein are delivering is now becoming the norm for customer behavior, and we're almost conditioning them to have that expectation. So it's almost a bad thing from other retailers, because customers now do expect to get everything quicker. They expect to get this great experience. They expect the online experience to be absolutely flawless. And they really are creating this quite a high level for other retailers to get to.
Yeah, and I think
particularly in those mid and value segments, but yes.
Yeah, I agree. And I think it's the other thing is to think about too is that even if you're a mid-scale or you're not at the scale, you can still find ways to compete and look at things like marketplaces. And I think look at JBs and what they're doing, for instance. Like, it's very early days with their marketplace, but they've already got 4,500 products and growing quickly. Just again becomes another point of differentiation. They then lift eyebrows. Can they then think about things like media? Similarly, you look at a lot of these platforms like Miracle, etc., that anyone can get access to. It's a white label marketplace. It provides opportunities. Similarly, there are plug and play media offers too that brands can think about. So there's still a lot of opportunity, but I think people just need to be on the front foot.
They do, and the years gone by, if I think this year that we're about to move into, this is an inflection point for many retailers. And thank you for a valuable session today.
Thank you. I just wanted to ask a quick question before we use the last few minutes to ask the audience. Productivity growth, it's been in the media, it's been everywhere. It's a major issue in Australia, and we're definitely lagging the US, as you said. How would these new trends improve productivity in the retail sector? They still have cost issues. They still have labor costs extremely high. Where do we see productivity going forward?
Well, my view of it, it's a great question. It's also a very broad question. If I think about, retailers really thinking about this whole concept of employee return, Jim Roll, really looking and focusing on clear point of difference, clear purpose, clear productivity metrics. I think, as the market stays fuller, as we start to see more spend, optimism, there'll be more focus on margin, more focus on return on capital. As one comment, I think you're going to see a greater focus on productivity. Now, we haven't focused on that in the last 12, 24 months at a government level. Government's been very keen to provide infrastructural support, tax cuts, to keep the whole thing afloat to some level. Now I think we're going to get into productivity increases. And I expect it to be a political platform at the election that we'll see in around, which we didn't touch on, but I think we'll see that in the April-May window. And that also has an impact on retail, just as a sideline. And I was going to ask you, Michaela, just briefly, we didn't get a chance quickly to talk about immigration, but your view on immigration in 25 and its effect on the economy?
Yeah, so that's been a very important reason why the economy held up a lot better than we initially expected, particularly the housing sector, right? We think that the level of immigration is going to slow. We have it around the 1.5 level year on year for next year. But in saying that, it's coming down from 2.5, so it's a pretty big decline. But it's still really high relative to the OECD market. So overall, 0.8 year on year is what you would expect in any advanced economies. Australian average over the last 20 years has been 1.5. So high population growth is not unusual for Australia, and the return to normal, which we will see in the next few years, if this slowed down if students starts to flow through a little bit more strongly, it's still going to take us to above normal levels. So it will continue to support growth and, of course, aging population and all those trends. But what we have seen recently in the data on the consumer side is that consumption is now being supported by domestic, so Australians in Australia and Australians spending overseas, rather than a few months or a couple of years ago when we had most of the spending done by those coming from offshore. So that's been the main change. But again, as I said, it's all been supported by the labor market. So if we have jobs for these people who come through, everything will be fine. But if unemployment starts to rise, then the whole consumer sector will be in a bit more trouble.
Well, this is, I can't do justice for this today, but there's commentary around the effect of China situation, in particular, its relationship to Australia, and dare I say it, the incoming president with his tariffs. But we'll see where that takes us, hey?
The flip side of the tariffs, though, is it could be a positive in the sense it'll free up capacity in China and we get cheaper products or cheaper prices down here, depending on the currency. Thanks, Brian, Anastasia, and Michaela, and thanks everyone for joining. Really appreciate the time, and I think it's been a great session.
Thank you, Ben. Thank you, Michaela. Thank you, Anastasia.
Thank you, everyone.
Leading and driving our insights, the work you're all doing. Wonderful session. Thanks, everybody.